Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of August 19th through August 23rd, where we'll try to help you navigate the markets where there's a warning Jackson Hole ahead, possible rough roads. So again, we'll try to help you navigate the markets with this warning of the Jackson Hole ahead. So let's get started. Welcome, Fairchild. Thank you for joining us. Glad to see you here. Fairchild, if you do me a favor, I was having some audio issues earlier today. If you could give me a thumbs up if the audio is okay on this, or anyone else in the chat, I would greatly appreciate it. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of August 19th through August 23rd. We keep our notes in a publicly accessible Google document. You can find a direct link to this Google document in the description box below. Our Google document with our notes contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trade strategies, our trade ideas for the trading week. Great. Thank you, Fairchild, for confirming the audio. I greatly appreciate it. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plans. And you can also find a direct link to this Google Drive folder in the description box below. Welcome to Crow. Glad to see you today. Hope you all had a great trading week. So firstly, we'll see how the markets ended up on Friday. So Friday got a pretty exuberant end to the week, although it was options expiration. So the indices kind of oscillated around their center point. So we got the Dow up 0.24%, NASDAQ up 0.21%, S&P only up 0.2%. Got 65% advancers, only 30% decliners, got 82% new highs, about 18% new lows. We've now got 63% above their 50-day moving average, only 37 below. And we've again got 65% now above their 200-day moving average, only 35% below. So again, it was August options expiration on Friday, so kind of a tug of war around the center point. Not a whole lot of movement, but we see that the markets all the indices ended up positive. Sector-wise, we had a mix in the Mag 7, so we have Apple, Nvidia up, Microsoft, Amazon down, Meta down, Google up. Only sectors a little red, healthcare, we'll see some defensives a little red, industrials a little bit. Welcome, Ellen Krantz, Walter Lyons, Ricky Kahn. Thank you all for joining us today. So some of the news, buying a house just got trickier. Wall Street ahead, S&P rebounds, soft landing hopes, boost U.S. stocks. S&P clinches the best week of the year, so we'll see this exuberant rebound we saw in all the indices this week. Stocks close higher, market comeback lifts S&P to best week of 2024. So again, after we had that a little bit of a panic last week with the yen carry trade unwind, etc., spike in the VIX, we saw a very exuberant rebound this week. Crude tested 80, bounced back down, tested a little below 70 or near 75, bounced back up, and so it's pretty range bound between 75 and 80 right now. Natural gas kind of bouncing around between 2 and 220. Gold made a new all-time high right now at 25.46, and all of the futures are showing positive on the indices. Saw a decline in the treasury yields, bounce back up in the prices. So the 30 years now about 4.15, 10 down to about 3.9, 5-year about 3.8. Bitcoin's been bouncing between 50 and 60 or so. Looks like it just rejected off 60 again recently. If we look at the major indices, and just a quick reminder, you can get access to these screeners also in the screener sheets, in our ETFs and Watchlist Google Sheets, and in our notes documents. So we look at all the indices again last week, and there's the Dow. See that steep decline off the top, pretty much would be bottom, broke back above the trend line, above the new moving average, gap up. So we'll see if it's going to retest that previous high. IWM, not quite as strong of a bounce, but it did break above its long-term moving average. It still has some gap to fill, plenty of room up to its recent high. So again, we might get more of a gap fill in the Russells on some good news. SPY, again, broke above the moving average, 50-day moving average, up above that declining trend line from last week, back in the middle of its channel. As we'll see, pretty much filled the gaps from the previous week, and we'll see if it retests that high right before the decline the previous week. NASDAQ pretty much did go back up to the high before the steep decline from last week. It's now sitting just above its 50-day moving average. A little bit of a gap to fill if it wants to go and retest that previous high as well. Again, might get some further resistance right at that previous high, but again, we do have a small gap to fill as well. Look at the breakdown of the technology components. Again, pretty exuberant rebound across the board. So we see ARC had a steeper decline than most of the technologies. Pretty exuberant rebound, back up to its shorter term moving average. Probably get some resistance there. Bangs, again, strong rebound up to its near term, or almost up to its 50-day moving average. So again, potentially some resistance there, some resistance at the previous high before the decline of last week. Semiconductors, not quite as strong of a rebound, but it did recapture its 200-day moving average. So if that holds, we'll see if it'll go retest the 50-day. Biotechs, again, not as strong of a rebound, but it did make it back up above its 50-day moving average, kind of in the middle of the channel. So again, it's got a small gap to fill. And we looked at the NASDAQ, so TQQQ is just the leverage long on the NASDAQ, so similar behavior. And the broader technology, again, very similar, exuberant run, up above the 200-day moving average again, got some room before the previous high from last week and the 50-day moving average, but not as many gaps to fill. So again, we'll see if all the indices and all these components go to test that high before the decline of last week. Probably get some resistance there. If that holds and they break back, then they can go retest their longer term moving averages and the previous highs. So again, we'll see how they hold up retesting the highs after the decline of last week. Strong rebound to this week. Welcome, Easy Mike. Thank you for joining us. Hope you had a good trading week. So let me grab a drink and then we'll look at the groups and sectors and industries. Okay, another quick question for the chat regarding the audio is I'm using a different mic. Is this mic better or worse than the mic that I typically use? Again, I was having some audio issues and swapped out the mic. Let me know if this one's better or worse than the previous one. So again, if we go look at the groups, sectors, industries, and FinBiz, see on Friday, strong technology, basic materials had a rebound, financials had a rebound. Really, the only weakness was some energy. Again, we saw oil break down around 75 or so. Real estate slightly negative, and then the defensives, healthcare, and industrials. For the week, technology, again, strong rebound, consumer cyclicals, mostly Mag 7. Again, financials, basic materials had a rebound, industrials, healthcare. Weakest was real estate. Thank you for the audio feedback, Fairchild, Easy Mike. So I'll stick with this one for now. So for the month, though, it's very defensive for the month. So utilities, healthcare, defenses, real estate, weakest communication services, technology, basic materials, energy, weak for the month. So again, we saw that strong rebound, strong decline in technology, etc., and then a strong rebound last week. So we'll see again if that rebound continues, or if again we get a rollover and a rotation back to a more defensive bent. We look at the industries. Welcome, LinkedIn. Thank you for joining us. Hope you had a great trading week. See big rebound in gold, get a new all-time high. Silver, not quite as strong of a rebound, but positive on Friday. Coal rebounded. Oil somewhat, mostly green. So some REITs, mortgage specialty, positive. Office even positive. Only negative, some other REITs, diversified, travel, industrial. Solar was negative, copper negative, uranium. Again, opportunities in uranium we've been talking about. Again, we'll be looking at those again tomorrow. There's rotations cycling down in uranium, so we'll be looking at least one stock, possibly more, that we like in the uranium sector, and wait for that to cycle back up. Silver and gold positive for the week. Solar was positive for the week. Copper positive for the week. Uranium actually positive for the week, but down on Friday. So again, possibly some near-term opportunities. REITs generally positive for the week. Really only negatives for the week is coal and healthcare facilities. For the month, REITs were generally positive, gold positive, copper negative, silver negative, steel negative. Again, uranium pretty negative, coal, etc. So again, we'll see if that rebound from Friday continues or if we get a rotation back to our monthly trends. Okay, now we'll quickly look at the economic data we got from last week, and then the upcoming economic data from the upcoming week. Just a quick reminder, as the important economic data news comes out, I try to capture that news and post it in our Discord, in the Surf the Markets channel in our Discord. Again, our Discord's free to join. I'll put the link up in the banner. And also, you can find the link to our Discord, a free invite to our Discord, in the description box below. Again, if as that data comes out, I'll try to capture a snapshot from investing.com, the raw data, etc. If there's news, post that. Also, inventories, natural gas and oil inventories from FinViz's calendar. So again, a great place to get real-time economic data, economic news by joining and participating in our Discord. So again, if I just quickly review the important economic results we got from last week. Tuesday, we got PPI, so producer price index, supplier inflation, a little bit lighter than expected, so that was positive. Again, probably fueled part of that rebound in the markets. And on Wednesday, we got mortgages. Mortgage dropped a little bit. Mortgage applications up. Again, as bond yields down, mortgage rates down a little bit. So mortgage applications jump. So that's good for housing. And we got CPI data. Again, source of volatility, but it was pretty much in line. Although I think it's notable that the core year on year now dropped below 3%. So the Fed will like that. That it's now headed down towards 2%, below 3%. And again, further fueled the exuberant rally in the markets this week. Thought it was a little interesting. Real earnings did drop off, so potentially decreased chance of a wage price spiral as well. Thursday we got jobless claims data. Again, a little bit lighter than expected. So again, job market, that was part of the concern, cause of the decline probably from the previous week was the non-farm payrolls numbers showed a higher unemployment rate. But this week, the new jobless claims a little bit lighter. So initial 227, a little bit lighter, continuing lighter. So people still finding jobs. Also, retail sales was stronger than expected. So core retail sales up 0.4 versus expected at 0.1. And month on month, 1% versus expected 0.4. So again, we seem to have gotten that Christmas in July. So the Amazon, a little bit of a concern, did not propagate through the rest of the retail market, and retail still doing well. So it looks like the consumer is still doing well. Unemployment's not crashing. And inflation slowly coming down. So all positive standpoint, but again, not a reason that the Fed has to overreact to that unemployment number. Friday, we got building permits down quite a bit. So new housing starts down. So not a lot of new housing starting. Then we got consumer sentiment, Michigan consumer sentiment. It's pretty flat. 1 year expectations still at 2.9, but still below 3. But the 5 years at 3. But again, no change. Consumer expectations picked up a little bit, and sentiment improved a little bit. So again, consumers, not feeling any worse. They're not seeing a significant decrease in inflation anytime soon. But again, all of the economic data from this week, I think, further fueled the exuberant rally rebound that we got. So let me grab a quick drink and we'll go through the rest of the economic calendar from last week and look at the upcoming economic data for next week. Okay, we had some bill auctions. They look pretty stable. On Monday, Tuesday, we talked about PPI data. We still got Fed officials talking. So crude oil stocks down more than expected. But again, we saw oil quickly test 80, bounce back down to 75. Talked about mortgages, talked about CPI data and real earnings. But oil inventories up, expected to be down. They were up. So again, we saw oil decline from 80 down to about 75. Talked about retail sales and jobless claims. Natural gas storage down more than expected, but we didn't really see a major pop in natural gas, although as we'll see, it's been trending upward with significant volatility. Talked about building permits and Michigan sentiment, and we see the oil rig count drop slightly. Total rig count dropped slightly as well. So Again, they're trying to hold that oil price up between 75, 80. So let's see the economic data we've got coming up for next week. Again, more Fed officials talking, so they'll talk about their view on rate cuts going forward, views on the inflation, economic data. And we'll again talk about the warning of the Jackson Hole ahead. Get the FOMC meeting minutes on Wednesday. I don't expect any significant differences from what we've heard, but again, people will be looking for any little tidbit that will tell them, when are they going to cut, how much are they going to cut, what's the rate of cut. And then again, we get the start of the Jackson Hole Symposium. Again, we'll talk about that in more details in a few minutes. Continuing jobless claims or jobless claims data as typical on Thursday. Some housing. Again, Jackson Hole continuing. We get home. So other than Jackson Hole, not a whole lot of significant economic data that would cause volatility. So again, the focus will be on the Fed meeting notes on Wednesday and the Jackson Hole on the 22nd through 24th. So we still got some earnings reporting, although the vast majority of the major companies have reported. The only Mag 7 left to report is NVIDIA, which their earnings are expected on the 28th after market close. So I think a previous article had the 22nd, but I confirmed right now in Thinkorswim it's showing NVIDIA's earnings on the 28th after market close. So again, the last of the Mag 7s, but obviously that will be a major focus for both NVIDIA and the Mag 7 technology, particularly semiconductors. Again, you can hear how we trade around earnings, how to make money trading when earnings matter. And again, earnings definitely matter, as well as guidance. We've also talked about spending on AI versus profit on AI. So again, another focus. Again, you can see the whole earnings calendar in investing.com in the earnings tab. I would highly recommend you review who's reporting in earnings, what sectors, how will that impact any stocks you're looking to buy, hold, similar sectors, sympathy plays, etc. So we see we've got Estee Lauder, so cosmetics, Palo Alto, so security technology. Again, the vast majority of the major companies, I believe, have reported, but again, you can find specific ones that may impact your trading. So I hope that all helps. Okay, let me grab a quick drink and we'll go through the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can get up to 75 free fractional shares of stock and a bonus of 2% for a 7% interest rate on your idle cash, a bonus of 2% for 30 days by opening and funding your account in Webull. If you fund it with 25K or more, you get the 75 free fractional shares and the 7% bonus APY. Under 25K, get 20 free fractional shares and still get that 7% interest rate. And each of the fractional shares is worth $3,000 to $3,000. Also, they offer additional promotions from time to time. So if you join Webull with our affiliate link in the description box below, you can get all their current promotions and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen in the online browser version of Webull. So we can see the histogram of advancers and decliners. So again, pretty balanced on Friday. We did have 3,200 advancers, 2,400 decliners, but again, relatively balanced, quite a few with no change. So again, I think that's a lot of affected by the options expiration on Friday. Thought this was quite interesting. We had strong inflow in the NASDAQ. So typically we see more of an inflow in the NYSE on Friday than the NASDAQ. But again, we saw a very strong inflow into the NASDAQ on Friday. So that may bode positively for technology going forward into next week. NYSE did have a positive inflow until the end of the day. But again, much smaller than the NASDAQ. So again, atypical from what we've seen recently. So I thought that was interesting as well. Again, a reminder, you can see the near-term earnings calendar in the calendar section on the market screen in Webull. So again, anybody reporting earnings in the near future, you can keep up with that also in the market screen in Webull. So if we look at the best performing industries for the week, semiconductors, although NVIDIA is not showing at the top for a change. Equipment, networking, retail. So retail did well, probably on those retail sales numbers. Diversified retail positive. Auto parts, probably getting some retail. Hotels positive. Fintech mostly positive. Renewable energy positive. Financials, banking, again, uranium positive for the week. See UAC, UROI, DNN for the week. Transports, healthcare, mostly positive. Metals and mining, strongly positive. Again, big rebound, all-time high in gold. Biotech, mostly positive. Look at the ETFs from Friday. So that's India. So up on the Dow. Must be an up on the S&P. It's interesting we're not seeing the typical ETFs on some of these. TQQQ, so up on the NASDAQ. That's Europe. There's the yen rebound we'll see. Up on the Russell, up on small caps. Industrials mixed, mostly a little positive. Healthcare positive. Financials very positive. Real estate a little split. Energy split. Coal was positive. Again, we saw that rebound. Communication services, utilities positive. Technology positive. Basic materials, again, we saw that rebound. Nickel, lithium, so maybe a rebound in lithium as well. And consumer defensives, very positive. Must be that's a gold miners, gold. Okay, we'll look at the futures, the forex and the futures as well. We'll look at the futures next, and also just a quick reminder, you can also now trade futures in Webull, so you can get more information, see their current offers via the discussion in our Discord. Again, you can now trade futures also in Webull. Welcome, Sydney Osborne. If I missed you earlier, hope you had a great trading week. So again, the indices, we see that strong rebound, big decline last week, strong rebound. Filled all the Dow, filled all the gaps, still got some room to the previous high before the collapse of last week. Similarly with the S&P, not quite as much room to test the high before the collapse from previous week, but pretty much, V bottom rebounds and all the major indices. NASDAQ got a little bit of room as well. So we'll see if they retest those points from the previous week, and if they can break above that and go back and retest their previous highs, or if they're going to roll over and possibly even test the low that was made last week. So again, big turning point. We'll see which way they head. All those points are probably going to be significant resistance. Again, all the foreign markets rebounded very similarly. So the Nikkei, Euro stocks, DAX, etc. Again, Russell not quite as strong of a rebound. It's got more, quite a significant amount to recapture from the decline. So again, we'll see if that trends back up and retest its previous high, or if it's going to collapse. Looks like it's got a strong level of consolidation down there. Saw that dramatic collapse in the VIX this week after that, panic pop on Monday of last week, but again, then it retraced all the way back to where it was before this week. So again, if you were holding, SVXY, SVOL, etc., had a nice profit potential, but again, we'll see if it looks like it's potentially going to bounce back up at this point. But again, dramatic up and down on the VIX. Again, hopefully our BeachBum trading community profited nicely on both sides of that spike in the VIX. Again, we saw oil test just above 80, break back down, sitting at 75. So it's been bouncing, between 72, 70, and 80 for a long time. Natural gas broke a little above 220, rolled over, sitting a little below 220. Again, gold, strong uptrend, new all-time high. Silver, not so much. It did bounce back, but hasn't broke its previous high. Looks like the bottom at 27 might get some resistance around 29. Looks like copper might slowly be bottoming and turning back up. So again, if you're playing futures, we have the COPX ETF, but I don't think the risk reward's all that great on it right now. So more of a futures trade. Palladium bounce, platinum bounce. Again, you can trade PALL. We have that ETF in our ETFs Google Sheet. Corn still declining, but again, the risk reward on that ETF corn isn't all that great. So again, when that swings back up, possibly a good futures trade. Wheat, you see it retested that 55 a couple times, got rejected, trending back down. So again, we had a position in WEAT, scalped that off when it got rejected off 550. We're going to look for another re-entry point when wheat bottoms and turns back up. I believe the last bottom on wheat was about 514 or so. So that's the point we're watching, and we'll be looking for a re-entry in wheat. Lumber bounced back up, sugar kind of bottoming. And again, we saw a quick decline in bond prices, bounce in bond yields, and then a slight decline in bond yields, bounce in bond prices on Friday. We'll see again if it trends back up to retest those previous highs. And DXY dollar finally broke below 103, so it's now in the 102s. So a number of foreign currencies had a rebound, euros, CAD, Swiss franc, not so much. Saw the yen had, we talked about that yen carry trade that declined. It was consolidating very flat most of the week. Then on Thursday, broke down and rebounded slightly on Friday, but it looks like, at least for the short term, that yen carry trade is the unraveling of that. It looked like it was pretty done for the short term. So again, we'll see if yen trends back down or if it turns back up. with further slow unraveling of that yen carry trade. So I hope that all helps. Okay, let me grab a drink and we'll look at our ETF's Google Sheet. Just a quick reminder, as we identify these trends, opportunities, either long or short, in any kind of commodity index theme, then we go to our ETF's Google Sheet, look for an ETF that we can trade our trade idea, again, whether it's long or short, and we can find an ETF in our ETF's Google Sheet to trade that trade idea appropriately. And you can do the same thing. You can get 24/7 access to our ETF's Google Sheet by joining our Patreon at the All Access or VIP level. So again, let me grab a drink and we'll talk about a couple updates to our ETF Google Sheet. Okay, a couple updates to our ETF's Google Sheet. The first is that I've added SBOL, SVOL, also into our ETF's Google Sheet. This is a monthly dividend payer short on volatility that we've been talking about. Again, hopefully some of our BeachBum traders, if that's the way you want to play short on volatility, hope you made a nice profit using SVOL. Again, you can hear our previous discussions about SVOL via the bonus link to the video in the notes. I wanted to add this to our ETF's Google Sheet so we can compare the risk reward profile of SVOL to like SVXY, SVIX, and we'll take a look at those and see which is a better way to short volatility going forward. Also, last week, Crow mentioned SPYU in the live chat of part one. SPYU is a Forex leveraged ETN long on the S&P. So I added that to the research sheet. We'll take a quick look at SPYU. I was not able to find a corresponding Forex leverage short on the SPY, but again, as the Crow says, if you'd like the extra juice for longing the SPY, you might be interested in SPYU. So again, we'll take a quick look at that in the research sheet of our ETF's Google Sheet. So here's SPYU. See again, currently it's at 42, highs at 48. So it's got a 52-week range of about 1.6. Bottom to top, again, it's relatively new, so the ranges are pretty much the same. So again, about a 1.6 bottom to top or support to resistance range. Again, this is for short-term trading, high leverage, Forex, as the Crow says, lots of juice. So again, when you see the S&P start to move up, then you might be interested in SPYU. It's a way to take advantage of that. We can see the movement. So there's the drop from last week when all the indices dropped, the strong swing back up. So had about a 10-point bounce this week. So again, if you were trading that, $10 per share, so pretty nice. It's not optionable, a 1% expense. And it's interesting, it's an ETN. Again, an ETF of ETFs. So again, we don't really get a breakdown of that in FinBiz since it's an ETN. We'll see if the ETF database has anything on it. So again, you can access those profiles by clicking on the links in our ETFs Google Sheet. So this shows as pending. See if we can see the holdings. Again, not currently available. And again, it's only been around since December 23. So again, relatively new. We don't have a long-term history, but again, if you're looking, for very high leverage, long on the S&P, you might be interested in this SPYU. Thank you again to Crow for sharing that with us. And again, if you're looking for high leverage on the S&P long, you can take a look at SPYU. Again, Crow, etc. If you've actually traded this, we'd love to hear your feedback in the comments or in our Discord. How's that working out for you? How's the liquidity, the trading on SPYU? Okay, if anyone also in the chat has any particular ETFs or category topics you'd like to look at, please throw those up. If I missed your question or your request previously, I apologize, but any ETFs you want to look at, otherwise I'll spin through them quickly and then we'll continue. Okay, I'll try to keep an eye on the chat, see if anyone has any topics there. Again, I did want to look at the VIX and volatility, particularly, and look at that comparison of S-Vol and SVXY, etc. So again, you can see the shorts on the VIX. So now we can compare all the major ETFs that we have short on the VIX. So we've got SVIX, which is -1 short. We've got SVOL, which is, again, a monthly dividend payer. And then we've got XVXY, which I think is like 1.5 or something on the short on the VIX. Again, we can see the different risk-reward profiles. So SVIX actually has a little bit of a higher short term, but longer term, well, and even longer term, it has a higher risk-reward. SVOL, SVOL is quite a bit lower. So after looking at this data, although SVOL does pay a monthly dividend, it's like 30 cents if you're going to hold that short for a long period of time. But again, with the volatility in the VIX, that might bounce back up. So shorter term trading, etc., on those big declines in the VIX on a spike, looks like the risk reward or SVIX or SVXY is better. And again, if anyone holds SVLL for more than a month, again, you can see the dividend payment information in our dividend payers Google Sheet. I'd love to hear your feedback on how that works out. Again, we talked about wheat. So wheat coming down, again, it retests that low, but again, you want to watch the low in the wheat futures. Also talked about, leverage long on the yen. We were long YCL. We got stopped out of that when it peaked and declined. If you want to short the yen with some leverage, YCS. So again, long or short on the yen. Otherwise, we have all the pairs for the technology sectors, etc., for all the commodities, oil, natural gas. So oil, long gush, short drip, natural gas, long boil, short cold, gold, we've got a variety of options that you can use to long or short with leverage or without. So GDXU is and the long on the gold miners. So when it's going up, GDXD short on the miners when it's going down. Silver, again, silver more of a catch-up trade. So long AGQ, short ZSL. Mexico did rebound. It's pretty volatile. So if you want to trade that volatility in Mexico, MEXX, we don't have a short, but we're watching that. We've talked about MEXX for several weeks. Again, we have a single stock, long and short, that you can find both in the main ETF sheet and in our research sheet. So if you're looking for a possibly leveraged ETF to trade a particular single stock, long or short, you can also find those in our ETFs Google Sheet. Again, I'll leave this up in case anyone else has any other topics you want to look at in our ETFs. Get bonds, different durations, different directions. So you can leverage long, TMF, leverage short, TBT or TMB for the 20-year. Watching uranium. And again, we talked about all the shorts for volatility. We've also got a couple options for leverage long. So UVXY, VXX. So you can compare the leverage longs as an option again, and I saw Easy Mike was just saying, long UVXY Friday, sell Monday. Okay, so let me grab a quick drink and we'll talk about our theme for this week. Okay, again, our theme for this week is warning, Jackson Hole ahead. So that's going to be the main focus in terms of Fed talk for this week is the Jackson Hole Symposium. So again, the Jackson Hole Symposium is the 22nd through to the 24th. So 3 days of various discussions. They'll be on, CNBC, etc., talking. You can access the site via the link to this, although there isn't a whole lot of additional information, except for that their theme for this symposium is reassessing the effectiveness and transmission of monetary policy. I thought that was an interesting topic, as it seems to allude to the effect, the transmission of rate hikes and rate cuts into the economy. So they've talked to, Powell's mentioned the long and lagging effects. So again, they may be discussing that, how long do they expect rate cuts, the transmission of rate cuts to take, and how might that affect their decision making? Do they need to make larger cuts for it to have any significant effect? Should they wait longer and collect more data to see that the full effect of their rate hikes has taken effect with bringing inflation down to 2%? So I expect to hear comments along those lines. Now, Chair Powell is expected to speak on the 23rd at 10 a.m. That looks like probably, I don't know, that must be Eastern time on the economic outlook. So again, his view of the economy. I'm sure that will have a lot of focus, cause some volatility around, what specifically he says. And again, everyone wants to hear, how soon are they going to cut in September? Are they going to cut half a point in September? How fast are they going to cut? Etc. So, any indication of significant cut in September, or again, I expect, my humble opinion, I expect they're going to stick to their story. They want more data. They want to see inflation steadily coming down to 2%. They don't see a collapse in the job market, so they don't need to rush, etc. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. Also, reminder, after Jackson Hole, the next Fed official or FOMC meeting isn't until mid-September, and we will get a dot plot, SEP, so we'll see the trajectory of rate cuts, the percent of probability of a rate cut for September has oscillated quite a bit. I think with some of the data from the previous week, they were talking about, 75 basis point, they need an emergency rate cut. And with the cooler PPI data, CPI data, etc., I think that probability has dropped. But I think there's still like a 50-50 chance of a 50% cut in September, again, in my humble opinion. I don't think they'll cut 50% or 50 basis points in September at this point. Again, they would need to beat inflation, and that non-farm payrolls data, again, our jobless claims from this week were not as bad. So possibly, stabilization of the job market, slowly inflation coming down. So that I don't think they need to drastically act, but it will be interesting again to hear what they have to say about the effect of rate cuts and how they affect that to transmit into the economy, how it will affect the economy. They've been, able to collect data, although again we had the perturbations of the pandemic, supply chain shocks, etc. So it'll be interesting to hear what they have to say. Also, we've been talking in general about, how to make money trading in August. We've talked, and you can hear our previous discussions and strategies. Also, how the markets typically perform. It's kind of interesting. After we saw that drop, we got a rebound back to about right where we were before, which is typical, of August is typically pretty flat. It doesn't mean we won't get volatility up and down, but again, historically, August has been generally flat. And then as we've seen, September typically down. So again, that might also lead to further volatility. So you can hear all those discussions via the links to our previous videos. And again, we talk about the trends throughout the summer, so you can hear those via our other videos. So again, we could see, further volatility, pretty much oscillating up and down, but the net historical trend is that August is generally flat. So I thought that was an interesting reaction we got over the past 2 weeks. So, okay, we've got a couple minutes. If anybody has any, again, any ETFs or topics you'd like to talk about, you can throw those up in the chat. I appreciate all your active participation, helping each other out in the chat. We'd love to have you also join our Discord, actively participate in our Discord. Our Discord's free to join. We've got channels to talk about all different types of trading, so you can get together with traders who trade the types of asset classes, the same type of trading style that you like, and again, help each other out, help each other make money trading. Again, we'd also love your feedback in the comments of our videos. and or in our Discord, etc. Let us know what we can do to improve our weekly trading game plans, any of our videos, our tools, Google Sheets, our community, etc. So again, if you put that in the comments to our video or in our Discord, or also you can contact us via any of our social media sites, and you can find links to our social media sites on our homepage, beachbumtrading.com, bum without the U. So again, if you have any questions, if there's anything we can do to help you make money trading, help you succeed in your trading career, um, plenty of ways that you can get in touch with us, and we'll respond as soon as we're able. Okay, so again, if anyone has any further questions, comments, etc., you can put those in the comments to this video in the Discord, etc. And tomorrow we will be taking all this market analysis, all these trading strategies, and using that data to select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. Also talk about how we can use dividend payers and several option strategies to make money trading while we wait for our top swing trading stocks to set up. So again, if anyone has any specific stocks you'd like to look at tomorrow, again, please put those in the comments or in the Discord, etc. Otherwise, again, we hope we'll see you all back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan for August 19th through August 23rd. Thank you again for everyone that joined us in the chat and everyone that's watching after the fact, and we hope to see you again tomorrow. Have a great day.